Welcome back. I don't know if I just repeated myself twice. To Strongman Personal Finance. Don't forget to go on Amazon and buy my book, bro. In this video, we're going to talk about some delicious earnings that I just witnessed. And I'm all hot and bothered by what I just saw. Oh, it's hotter than me and Khalifa. Oh, Mia, if I give you money, will you be my friend? Oh. So we're talking specifically about HIMS stock. So HIMS is all the rage. How did I discover HIMS? Well, there was this spaz on YouTube called George Perez, and he'd go like, "Hey guys, George Perez here, wow!" And then he just stopped posting to YouTube because I guess he got enough money from Patreon to just grift people outside of YouTube. But one of the stocks he always talked about was HIMS and HERS, and basically it's a full service online, I guess, health company for men. It's all about providing men all the services they need. If you got some pee-pee problems, they're here to help. If you need to talk to a counselor, they're there to help, I believe. There's all sorts of stuff that you can go on there. And it's very, very tailored to men because we men, we don't get any treatment. Nobody cares about the problems of men. Nobody cares if men die until HIMS came out. So HIMS is up 21%. And you got to ask yourself, wow, what's going on here? We go back 3 months, it's up 91%. We go back a year, it's up 122%. And over the past, well, you can see it was a massive bubble and why it was popular in 2021. But you can see very recently it's cratered and then it's starting to have a massive, insane recovery. Now, the question is why? And to be honest, I was actually slightly impressed by these earnings. It ain't making money yet, but I was very, very, very impressed with the numbers that I saw. Okay, so let's go ahead and break it down a little bit more. Full year, this is their most recent report. Full year 2022 revenue of $526 million, up 94% year over year. 94% increase in revenue year over year. That's pretty incredible. Q4 record revenue of $167 million, up 97%. So their revenue over time is actually accelerating faster. That's pretty good, okay? Q4 net loss of $10.9 million and adjusted EBITDA profitability. Okay, that's garbage. So they're still losing money, right? But the question is, are they moving towards profitability? Well, if we go look at their historic earnings, actually, let's go ahead and calculate the profit margin here. 10.9 divided by 167.2. So they had a negative 6.5% loss on the bottom line of the income statement, okay? Let's go look at their prior earnings and see how it's different. Now, we go and we look. I go to stockanalysis.com. Look at their profit margin. There's an error. Okay, whatever. But you can see their profit margin is getting better and better and better. Look over the last couple of quarters. Negative 36, negative 16, negative 17, negative 13, negative 6.5. Look at their gross margin. It's also increasing. 73, 73, 76, 79, 79, almost 80% gross margin. That's pretty impressive, okay? And it isn't a fluke because even their operating margin is getting better, okay? It wasn't some kind of like tax benefit or whatever. We'll see in more detail. But they're improving on every metric. This is pretty impressive. It could potentially be something to speculate on, assuming the growth continues and they actually become profitable. 100%, okay? Now, I'm not buying the stock. I'm just saying it's something to consider and watch closely, okay? Because it's a very interesting change in circumstances. Now, everybody's like, oh, strongman hates unprofitable companies. Yeah, that's true. But when I see a company steadily increasing towards profitability, massive revenue growth, okay, this is something I would be interested in watching. And then at some point when it turns profitable and it starts to stay profitable, maybe I could just have some fun and buy a couple shares. I don't know. We'll see. Okay. So that's their profit margin. Let's do Q1 and full year 2023 guidance. With full year 2023 revenue in the range of 735 to 755. Okay. Now, if their full year 2023 revenue is 755, let's go ahead and look at their trailing. So now they're projecting their revenue is going to increase by 43% next year. That's still pretty incredible growth, okay? Not as fast as it was before, but that's still pretty freaking incredible, okay? But and that's on the high end, of course. And they have a 2025 target of at least 1.2 billion in revenue. It's pretty ambitious, and 100 million in adjusted EBITDA. You can't really hate it, okay? Like, this is a company that could very easily become profitable at some point in the future. 100%. This is something that is interesting, okay? Especially with these increases in margins and massive growth in revenue. Now, let's go ahead and look at the financial statements briefly. So, current assets are down. They've got about 46 million in cash, and they got 132 million in short-term investments. So their current assets are very cash heavy, very cash equivalent heavy. Their current liabilities are only 47 million. When it comes to cash equivalents, they're sitting pretty good. They're not going to go bankrupt in the next year. They could easily pay off their short-term debt, and they can actually pay off all of their debt with their cash and short-term investments. I mean, I've been more negative on this company before, but now it's like, okay, I've seen worse balance sheets, okay? They do have 100, so 1/3 of their assets is goodwill. Okay, that's something to pay attention to. But overall, solid balance sheet. They are not going to go bankrupt within the next year unless something drastically changes, okay? Pretty impressive. How did their equity increase? Well, stock issuance. And yes, so basically their equity's gone down, and the only way they've increased their assets is through stock issuance, but that makes sense for an unprofitable company. Okay. Revenue, we basically already covered this. I mean, their revenue's massively exploding. Their profit margins are improving. Their marketing expense has doubled, so it's outpaced their revenue growth. They could always cut that down, maybe. Operations and support has grown by 50-something%, maybe 60%. Technology development. So basically, their expenses really aren't exploding relative to their revenues, okay? Their marketing expense has definitely gone up year over year in the last 3 months, and it's outstripped their revenue growth. But everything else seems to have been actually growing slower. So if they decide to cut their revenue expense, well, that could potentially be, or their marketing expense, that could help them become profitable. So their loss from operations is 11 million. Now, we see there's some other income here, okay? And that's why it's good to look at both. You want to look at net loss, and you want to look at loss from operations, because sometimes there's like non-operating gains or losses that may be one-time gains or one-time expenses that could distort the bottom line profitability for a quarter. So you may be misled. So you want to look at everything. You want to look at gross margin, gross profit. You want to look at operating profit or loss. You want to look at net loss, and you kind of want to see, well, why are there big differences if there are? And here, there really aren't any differences. This company is definitely improving, okay? But of course, they're diluting. So now let's look at the statement of cash flows. Okay, they still have negative cash from operations, and they have 42 million in the last year of stock-based compensation. Sorry, if I zoom, this is like disgusting. I don't know what they did with their report. I can't even see what's going on here. It looks like they burned about $26 million in operations. That's what I think it's saying there. And they have a decent amount of stock-based compensation. So for now, it's like, okay, they're still going to dilute you. They're still burning cash from operations. Obviously, this company is going to be cash flow negative, maybe for the next couple of quarters. But at some point, I think this company may have, if they can keep their revenue growth and they just cut their marketing expenses a little bit, yeah, they can become profitable very, very easily. Okay. So overall, very impressive earnings. I can totally see why the stock has recovered massively. This actually makes more sense to me than all the other clown stocks out there, and even Tesla. Okay, this actually makes sense to me. I can see why this stock is potentially recovering. Does that mean it's a good buy now? No, you'd have to do way more. Like you'd have to look at valuations and all that. But from an accounting perspective, it's not looking that bad. Let's see, price to sales, 3.8, price to book, 6. So, I mean, it's still pricey, but it's a growth company. It's growing at its revenues 97% year over year, and it's projected to grow like 45% or something in the next year. Interesting stock. Okay. And their balance sheet is solid. I can't really hate on this company, at least recently. Can't really hate on it. What are your thoughts, boys? HIMS or Teladoc, my you know what. Honestly, HIMS is, to me, it's less risky. They have a very solid balance sheet. They do have 1/3 of their balance sheet in goodwill. That's a risk. Very big. 1/3 of their assets are goodwill. But even their tangible assets are more than their liability. They could pay off all their liabilities in one fell swoop. Boop, and still have plenty of cash. But they're probably not going to do that because they're still burning cash from operations. But, I mean, like, I'm not, like, hating on this most recent earnings. Strongman going all in on HIMS. I am definitely not. I haven't even maxed my tax advantage accounts yet. I'm not buying any individual stocks until I've maxed my Roth, my wife's Roth, and my solo 401k. Then I will consider buying individual stocks. Going balls deep in, buy it all in. Now, I mean, things could change. Wasn't Lefebvre talking about this stock as well? Maybe. I mean, if he bought this stock, I would be like, okay, I kind of get it's a speculative bet, but it's not as trashy as Tattooed Chef. Okay, it's not. Tattooed Chef was doomed from the beginning. Gross margins of 10%, done. Like, there's no way Tattooed Chef was ever going to be profitable. And then their gross margin collapsed and became negative. But whatever, I'm an idiot. Jeremy Lefebvre's smarter than me. Strongman's shilling individual stocks. I am not. I'm just impressed with the earnings. I'm impressed. I'm not saying buy the stock. I'm not buying the stock. I'm saying it's something to watch, be interested in. I am not buying this stock. HIMS my limp. HIMS is saving me from going bald. What do you think? Am I bald? People say I'm bald. I don't understand. I need a haircut. Where's VT? I'll do it. Is VT worth it with the Forex risk? Talking about it with Fabio and Cole. Maybe they'd be more knowledgeable on that than I am. You'd have to look at valuation, all that, to know if it's a good buy. Your efficient high market says this price correctly. Thank you, Kid Freshie. I guess I can just never look at financial statements again. Strongman, we are way overdue for a Jeremy reaction video. I mean, has he done anything that's like really stupid? That's what I have to ask. Just admit you don't believe in the efficient market hypothesis, or you're pretending you don't believe in order to do your fake analysis to get clicks and sell course. Well, then why do I have 95% of my portfolio in the Vanguard Total World Stock Market Index Fund, Kid Freshie? If I didn't believe in the efficient market hypothesis, if I didn't believe the long run stocks eventually return to their intrinsic values, and that if you dollar cost average over time, you're basically going to pay fair value for a stock. If I didn't believe that, why would I have 95% of my portfolio in the Vanguard Total World Stock Market Index Fund? If I thought I could consistently make money in individual stocks, wouldn't I have more of my portfolio in individual stocks? Obviously not. Let's see. Remember when you said you know almost zero research into Baba before you bought it? Just stop pretending you know anything about stocks. I know a lot about stocks. I can read every single financial statement and completely understand what has happened with the company. 100% I can do that. Investing is about the future, though, of course. Which is why I don't say, oh, this is going to 10x. I don't know. Let's see. Okay, so you admit your analyses. You know what? They're bogus. That's right. You're right. I mean, every time I look at a financial statement, it's just bogus. You have a full set of hair. Doubt you'll need a finish stride. Yeah, I don't need it. I miss the Jeremy intros. I know. Maybe I'll do another intro contest at some point. All right, guys. That's it. HIMS. Interesting earnings. Interesting stock. I'm not buying it. I haven't maxed my IRAs or my 401k yet. But I don't know. Maybe at some point I will. But if I do buy it, I'm not going to tell you. I'll tell you that. I started buying HIMS at 8, bought down to 3, and then back up my average. I'm currently up since it's beating expectations. Hard to. Hey, I mean, that's good pick. Kid Freshie just debates strongman. Or he ain't gonna. He's a bussy. Max my Roth IRA. Yeah, I haven't done that yet. I'm waiting for my tax refund. Then I'm gonna max it out. All right, guys, I have to go back to work. Cheers.